Let's take a closer look at the real reason why so many people remain poor. It's not just about how much money you earn, it's about how you think about money and wealth. A poor mindset keeps you stuck, while a rich mindset opens up endless opportunities. Take this example, a gold Rolex Daytona. At first glance, many people might say, "What a waste of money." A $50,000 watch seems excessive to those who don't understand the bigger picture. But for those with a wealthy mindset, this isn't just a watch, it's an asset. The gold in that watch retains its value, even as inflation eats away at the currency. Over time, it may even increase in value. This leads us to an important concept, Gresham's law. This principle states that when bad money enters a system, good money goes into hiding. But what is bad money? It's the printed currency that loses value over time due to inflation. And what is good money? It's assets like gold, silver, and real estate. Tangible things that retain their worth even as the value of paper money declines. Let's break it down further. Imagine you're holding a $10 bill in one hand and a 1964 Kennedy half dollar in the other. Which one would you choose? Most people immediately go for the $10 bill because it seems like it has more value. But here's the catch. That silver coin is made of real silver and is worth far more than $10 in today's market. This is where the difference in mindset comes into play. The wealthy prioritize real assets, while the average person focuses on immediate, surface-level gains. This isn't just theory, it's a reality we see every day. Governments around the world, especially in the United States, have been printing money at an unprecedented rate. Every time more money is printed, the value of the existing currency decreases. This creates inflation, which makes everyday goods and services more expensive. For example, the cost of a chicken at the supermarket might rise to $10, not because the chicken is more valuable, but because it now takes more dollars to buy the same item. So how do the rich respond? They don't hold on to bad money. Instead, they invest in assets that grow in value. Real estate is a prime example. By using debt, yes, debt, they purchase properties. While the value of money decreases, the value of those properties increases. This is how the wealthy continue to build their fortunes, even during economic downturns. Now let's go back to the gold Rolex. Why would someone spend $50,000 on a watch when they could buy a cheap alternative? The answer is simple. It's not about the watch, it's about the gold. That gold is a hedge against inflation, a tangible asset that gains value as the economy shifts. While someone else might buy a smartwatch that loses value the moment it's purchased, the gold Rolex holds its worth and even appreciates over time. The same logic applies to other forms of gold and silver. For decades, I've been buying gold. When I first started, it was $50 an ounce. Today, gold is worth thousands per ounce, and its value is only projected to rise. Whether it's stored in a private vault or crafted into jewelry, gold remains a reliable store of value. But here's the problem. Most people don't think this way. They focus on short-term savings and cheap solutions. They'll buy trendy handbags or flashy gadgets that depreciate in value, leaving them with nothing of worth in the long run. This is the fundamental difference between a poor mindset and a rich mindset. A poor mindset says, "How can I save money right now?" A rich mindset asks, "How can I grow my wealth over time?" It's not about how much something costs today, it's about its long-term value. Let's talk about mindfulness. Are you thinking like a wealthy investor or like someone struggling to get by? When you buy something, do you consider its long-term worth, or are you just looking for the cheapest option? Mindfulness is about being intentional with your decisions and understanding the bigger picture. For example, when governments print more money, inflation rises and the cost of living increases. Gas prices go up, groceries become more expensive, and basic necessities become harder to afford. Meanwhile, the wealthy who own assets like oil wells and real estate see their net worth grow. This isn't just about money, it's about education. Schools don't teach us how to think about wealth. They don't explain inflation, assets, or investment strategies. Instead, we're taught to get a job, save money, and live frugally. But this approach doesn't work in an economy where the value of money is constantly decreasing. If you want to change your financial future, you need to change your mindset. Start thinking about assets, not expenses. Start prioritizing value over cost. And most importantly, start educating yourself about money. The truth is, it's not about the car you drive or the watch you wear. It's about how you think. You could drive a Toyota Prius or a luxury collector car. It doesn't matter. What matters is whether you're building wealth or staying stuck in the same financial cycle. So ask yourself, are you thinking like a rich person or a poor person? Are you investing in your future, or are you just trying to get by? The choice is yours. If you're ready to learn more, stay tuned. In the next segment, we'll discuss the top 3 things schools should have taught you about money, but didn't. It's time to rethink your approach and start building a future of financial freedom.